I'm pretty sure that if you're watching this video, you already have at least a little bit of Bitcoin. But you always have to ask yourself, do you have enough? Today we're going to be looking at why you need Bitcoin in your portfolio, and we're going to quick fire through a number of different metrics that prove Bitcoin's necessity to not just be in your portfolio, but to be in everyone's portfolio, not just as a speculative hedge, but as a truly foundational cornerstone of your investments. So as we can immediately see here from the portfolio monthly returns, looking at BTC versus gold versus the S&P 500, you can already see we have exponentially higher gains during the positive price action periods when looking at Bitcoin compared to these traditional assets. Now I know what you're thinking, just looking at this purely on a 1 year period compared to the S&P 500 and gold isn't necessarily the best way that we can determine this. Well, what we can do is look at S&P, Dow Jones, Tesla and Apple compared to Bitcoin over a 1 year period and see that Bitcoin has still outperformed them all massively, which is especially impressive considering Bitcoin's basically been going sideways, if not slightly downwards, for about 6 months. So the upside price movements of Bitcoin far outweigh any stagnant or downwards price action we will experience. Now I know that you're then thinking, surely Bitcoin is just too volatile. It doesn't need to be a cornerstone of my investments because it fluctuates so much. Well, this is true. Bitcoin does have a slightly higher level of volatility compared to more traditional markets. But if we do look at Bitcoin volatility individually and just look at a more longer term basis, potentially the 3 month, 6 month and yearly basis of Bitcoin volatility, we can see this is on a very general downtrend. And as Bitcoin grows and matures even further, its volatility and speculative nature will decrease even more substantially. And it will likely be a much less emotional experience having such a volatile, or what used to be volatile, asset in your portfolio. But even in spite of this still high volatility, we can look at the Bitcoin Sharpe ratio, which is looking at the risk adjusted returns of Bitcoin, basically looking at the real returns, dividing that by the standard deviation of volatility and comparing that to the Dow Jones and S&P 500, which have historically been fairly low baseline assets for all portfolios. And even though Bitcoin has been in a long drawn out bear cycle, we still have a higher Sharpe ratio than these assets. Now I know you're then thinking, well, Bitcoin is so correlated to the S&P 500 that I don't necessarily need a large exposure. Well, again, this is true in periods, but we do have long expanding periods of Bitcoin's low correlation to the S&P 500. And recently, over the past few months, this correlation has actually been decreasing slightly. In fact, if we look at the correlation between US equities in the S&P 500 and Chinese-based equities, we can see that there's actually periods where Chinese equities are more correlated to Bitcoin than the US markets. This is because Bitcoin's a global asset, so unlike just looking at equities from one country or indexes from another, Bitcoin that can be invested in by anyone, regardless of where they are, that's impacted by the economic situations, not just of one country, but of all countries, is the true hedge and diversification asset you need. But you may have previously heard that the true diversification asset is gold. And while this may be true in some aspects, we can see here that Bitcoin, even though it does have periods of correlation to gold, it actually has a lot of uncorrelated periods too. But when we look at the actual underlying performance of BTC compared to gold, especially over a longer time frame, we can see that Bitcoin far outperforms, especially considering gold set its all-time high in 2020 and still hasn't surpassed that. We can also look at Bitcoin versus Bitcoin equivalents in the terms of grayscale Bitcoin and other mimicking paper Bitcoin funds. And we can see here that even if you're trying to implement Bitcoin into your portfolio through a derivative, it underperforms. Bitcoin is the real deal, and investing in anything that's just been purely made to mimic that performance usually tends to underperform anyway. And especially if we look at something like miners, a lot of people will look to these to try and speculate and increase their efficiency and increase their profits. But again, these miner stocks are just so correlated to Bitcoin and still underperform during downturns, and they have the risk of going bankrupt as well as many other hindrances along the way, whereas Bitcoin is Bitcoin regardless of who's mining it, and it still outperforms. And you're probably also saying to yourself, but certain altcoins far outperform Bitcoin. Well, in certain market conditions that may be true, but if we look at Bitcoin versus Ethereum, or the second largest cryptocurrency, over the previous year, we can see that the purchasing power of Ethereum compared to Bitcoin has decreased substantially. And this is Typically true throughout all Bitcoin bear cycles. We see the Bitcoin dominance rise exponentially, and 99% of altcoins are unfortunately destined to fail, and on a longer term time frame, absolutely nothing has come close to the uncorrelated performance of Bitcoin. And all of this is still without mentioning certain Bitcoin fundamentals like the halving event coming in 2024 that will decrease the inflation rate of Bitcoin by 50%, as well as a BlackRock and many other huge ETF filings that hopefully upon approval will see huge liquidity and capital inflows into the Bitcoin markets. And a recent study by BlackRock actually suggests a Bitcoin allocation of over 80%, which is a substantial amount of your portfolio made solely of Bitcoin, which is pretty bold coming from the world's largest asset manager. We can even see that recently one of the top 4 accounting firms in the world has declared Bitcoin as an ESG friendly asset. Now, whether you buy into the ESG narrative or not, surely it is a good thing that more traditional investors will look at Bitcoin as something that may comply with their economic and social values. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number 1 source for Bitcoin information. So just to summarize, looking at a number of portfolio tools such as the Sharpe ratio and correlation of Bitcoin to baseline assets such as the S&P 500, it's evident that Bitcoin's outsized risk-adjusted returns and diversification benefits prove Bitcoin's performance benefits outside of purely percentile gains. And recent studies by the world's largest asset manager, BlackRock, who are also currently awaiting a BTC ETF application approval, also suggest a very large portfolio allocation to Bitcoin. This also comes alongside narrative shifts from Bitcoin becoming an ESG suitable asset for investors. At this stage, it's simply too risky to not hold Bitcoin. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on having an outsized portion of Bitcoin in your portfolio. Is this something you'd suggest to anyone else? Obviously, none of this is financial advice, but let me know in the comments down below and on social media. Thank you all very much for watching, and I'll see you in the next one.